Hello, this is Davide Biocchi speaking, and here we go for my weekly intermarket analysis. Let's start as usual with the euro dollar, that right now is, let's say, around the price of 1.087088, and let's say very close to the first support that we can identify with the price of 1.08. We have another one additional. If the market will go below this one, that will be 1.06. But in my opinion, this is a quite interesting support, and we must look at it in case of a touch, and then especially in case of a reversal pattern that we will finally see, I think. Um, let's say that also on the other side, we have an area that is around the price of 1.113, 1.118, that will determine the violation of a sideways above. So this is quite a quite interesting situation. For sure, we also have a quite strong dollar index that is telling us that the dollar is not only stronger than the euro, but is stronger in general with all the other worldwide currency, especially Japanese yen, especially um, British pound, and especially euro. So let's see here on the euro dollar that we have something like a cap, and that the possibility is that at least we could go for this level that is not so far. So we will see later what the market will offer us on these currencies. Let's switch immediately after to let's say crude oil, so commodities. The crude oil is nearly 95, so nearly the main support area, that is 94 to $95. Despite the fact that we can expect a reaction, we must identify also the next support in case of the market below this level, that is around $85 per barrel. So we can expect the market to rebound here or to strictly move to the next support level. For sure, all the situation connected to China, also new lockdowns that are coming, could impact a lot the quantity of oil that will be asked by the Chinese economy, that more or less has a big impact in this market. So this is what make the crude oil less expensive than before, especially after the spike we have here in the panic buying situation around 130. So let's say that in case of a price will rebound from here, we can expect the market even to remain in a trading range that will be 95 to $115 per barrel. This is, in my opinion, what is going to be the most probable situation. Another interesting commodity is the gold. The gold that is now trying to consolidate a price in between the two levels that are 1,880 and 1,965, more or less remaining around this level. The gold has, in case of need, the possibility to fastly move above to reach again the previous historical high that was touched twice here, and that is probably on the road to create what is essentially, for the moment, a double top. In case of violation below, we have a clear idea that we will have immediately after a first support, but the most relevant one is, let's say, something like 100 points, $100 below. So this is a quite interesting chart to see, let's say, in medium term. Let's switch immediately after to the stock indices, and let's start with the European situation. European indices are weaker than the US one, especially because they failed any attempt to go back to the previous trading range, as it was the last attempt that went on 10 days ago, more or less, and the market was rejected here by this level, that is the area that we have between 3,900 to 4,000. So this is more or less the resistance that worked on the Euro Stock 50. But the most important European index is for sure the German DAX, and even here we have the same very similar chart. Here the level is 14,800. For close than a year, the market remained above this level and was able to go up and down around the price of 15,500. That was the average of this, and also the possibility to, let's say, to do 2 times to record historical high here. So this is a quite interesting situation, but the market was rejected, completely rejected by this area. So we have a market that continued to show a weakness, a quite relevant weakness, because European indices and European economy are impacted by the war more than all the others worldwide. So the market are weak, and this is very clear from the chart. Let's see what is going to happen. The only story that will count will be one day to go back to this previous trading range. What about the US index? The US index are, let's say, more or less doing better, as we can see here. This is the best, that is the S&P 500 that was rejected by this resistance in the chart, that now is coming back and obviously is trying to find a moment in which it can rebound. But I don't know if we are already back to that moment. In this case, we can say that the S&P 500 that involve more value stock than the Nasdaq is doing better. Value stock, the growth stocks were sold again in the previous week, and the Nasdaq closed exactly at the minimum, around the minimum of the week, and is starting also trading before the opening bell in Wall Street at a price that is below the last week close. So the situation here is very clear. We have a strong resistance that work a lot here around 15,200, and now we are going to test some relevant support that we have on the way back to this minimum. So we have several support in between this level, and especially if we will test them, we must look for a potential reaction. The true story is told us by the Russell. The Russell did an attempt to re-enter the previous trading range, the one that lasted more than 1 year, that was in between the price of 2,100 to 2,350, more or less. This was the previous trading range that lasted for quite 1 year, and there was only one attempt to go above. We have now a new one for this new year that is 1,900 to 2,100, and there was recently an attempt to go up there, but it was rejected. It was a failure. So we are back in the previous trading range, and it seems that the next step will be to see the market or touching or very close to the price of 1,900. Let's see what the situation is offering us. Let's say also a final look at the 10 years T-bond that is going down and down and down. This means that the yield is increasing, and this is exactly because the market expects the Fed to be very hawkish soon. So the situation is that starting from here, we now can tell that we have a yield that is now around 2.7% on the 10 years and 2.54% on the 2 years. So this is a quite relevant situation. Let's see what is going to happen in this very interesting market that will impact also, obviously, the stock indices. This is all for this week. Thank you very much for being here. Ciao, ciao from Davide. Bye-bye.